Bitcoin becoming more and more mainstream and becoming more widely acceptable as an asset class, as a platform, more and more companies that may not be directly financial in nature will likely find touch points into the Bitcoin ecosystem, one way or another, inevitably. And so to make this, to give a short summary first, the Norwegian energy company Aker, or Aker, ASA, has formed a new subsidiary called Seetee, I believe, in Norway. It's a new subsidiary dedicated to Bitcoin, and they will hold, invest all the liquid assets in Bitcoin. Currently, it's around $58 million worth. And I believe it was like more than 1,000 something. I don't have the numbers right now, but more than 1,000 Bitcoin. So they will invest and participate in the Bitcoin ecosystem. And Seetee plans to spin up Bitcoin mining operations, a natural fit for the energy giant, but also intends to develop Bitcoin-related software, potentially based on Blockstream's products and or Lightning Network. So it can't be more bullish than described. So welcome to the Kevin Dovani connection. And there is a wonderful shareholders letter by the founder and chairman of Seetee. His name is Kjell Inge Roque. And one of these quotes, he says, "We aim to increase the capitalization significantly over time as we gain experience and identify exciting opportunities. I'm fascinated by the prospect of Bitcoin Lightning wallets that may enable instant credit via micropayments without the need to offer personal information that my counterpart can monetize without approval or compensation." And I think he's alluding, definitely, I'm pretty sure he's definitely alluding to Jake Muller's strike. Fascinating product, fascinating project, and it's in an accelerated pace, unfathomable. So additionally, Mr. Roque, I believe it's pronounced, the chairman and founder of Seetee, it's a new subsidiary just for that, just for holding and investing Bitcoin only, publish a shareholder letter which outlines both the motivation and thought process around Seetee and Aker's commitment to Bitcoin, as well as the products and services they may develop. Now, let me screen share this for you. You can read this, of course, for yourself. I'm not gonna, I hesitate to read the whole thing because it's gonna take too much time. But I highlighted the most important or the essential parts of it. But before we go to that, to the shareholders letter, let me just give you one more news update, and that is about NYDIG. I'm pretty sure you listened to MicroStrategy, Michael Saylor's conference together with Stephen Ross. He wrote a beautiful shareholders letter. Actually, that you should read the shareholder letter of StoneReach before you read the shareholder letter. I mean, doesn't matter, but I think in that consecutive order would be much more logical. So NYDIG raises $200 million from strategic partners, and additional capital comes amid dramatic acceleration of Bitcoin adoption via NYDIG from traditional financial services firms. So the summary of the article says, a leading provider, NYDIG, a leading provider of technology investment solutions for Bitcoin, today announced a $200 million growth capital round led by strategic partners StoneReach Holdings Group, Morgan Stanley, New York Life, MassMutual and Source Fund Management, and FS Investments. Bessemer Venture Partners and FinTech Collective, who led the two prior funding rounds for NYDIG, were also significant participants. The article is from March 8th, 2021. Today is March 9th, 2021. I don't know what the Bitcoin price is, to be honest with you. It's around 42, 43, 45,000 euros. Not sure about the dollar denominated, but it really doesn't matter. Actually, fiat denomination doesn't matter at all. That's what I'm saying. We need to think totally differently in terms of, we need to think in terms of purchasing power of the real value, what it can, with the absolute scarcity of Bitcoin and the whole magic sauce, Bitcoin and the fundamentals of Bitcoin. I think it's beyond our imagination, wildest dreams, and the comprehension, even for Elon Musk, what it would mean, for the acceleration, unleashing, technological, scientific, economical power rooted in Bitcoin. Anyway, I'm digressing. So let me screen share the PDF for you now, the shareholder letter by Kjell Inge Roque, the chairman and founder of Aker, who have founded, established the new subsidiary Seetee, and there it goes. So I highlighted the most important passages or parts of it in yellow. Dear shareholders, today we announced that Aker has established Seetee, a new company that will invest in exciting projects and companies throughout the Bitcoin ecosystem while keeping all of its liquid investable assets in Bitcoin. Before I proceed with our story, I want to state upfront that I'm aware that Bitcoin is often criticized for a number of perceived challenges, including its electricity consumption, its inability to scale with respect to transactions, and its potential to facilitate anonymous, illegitimate payments. We believe that Bitcoin can be a solution rather than a problem for each of those, but we will get to the arguments for that later. Seetee's, or sorry for the bad pronunciation, if it's Norwegian pronunciation, Seetee's strategy is threefold. Now, what I like this strategy, how he approaches the whole shareholders letter, is he disassembles or just smashes all the FUD, the fear, uncertainty, doubt, all the the attempts to discredit Bitcoin and all that bullshit it's been going on. So he writes, first, we will use Bitcoin as our treasury asset and join the community. In Bitcoin speak, we will be hodlers. We will be different, but additive, perhaps not as rebellious as the cypherpunks who invented Bitcoin. Now, let me just comment this a little bit, between the lines. I mean, I don't expect, people like Michael Saylor, who have like established corporations, institutions to come out and, and come and say, we need to separate money and state, or, with cypherpunks, we are for freedom and true, liberty and, for the end and, making the whole, fully criminal nation state, governmental, central banking, military, corporate, industrial complex obsolete. This is not what I expect, but you always need to read between the lines. So I guess it's sort of a Trojan horse language, but it's good. It's good. It's all, it raises sort of the level of the ocean, and everything else, comes to the surface and cleanses everything out. So yeah, but he continues. But much more progressive than most established corporates. The team at Seetee is already running open source Bitcoin payment servers and will remain active contributors in the community. Second, Seetee will establish mining operations that transfers stranded or intermittent electricity without stable demand locally, wind, solar, hydropower, to economic assets that can be used anywhere. Bitcoin is, in our eyes, a load balancing economic battery. And batteries are essential to the energy transition, blah, blah, required to reach the targets, of this whole climate hysterical, deadlines. Anyway, our ambition is to be a valuable partner in new renewable projects. And it goes on and on and on. And then after 40 years in business, I've learned that you always have to keep an eye out for new opportunities and developments on the horizon. And please, just as a reminder, go on. I'll put the show notes. I'll put in the show notes the links, all the links, and read it for yourself. If you take your time for that. Seetee marks that horizon. It goes on. It positions itself in the middle of an industry that could define the next several decades, if not even centuries, in my opinion, or even thousands of years, much like the internet has done since the early 1990s. Seetee is an open invitation to push, pull, and poke life as we know it, to act like young entrepreneurs every day. And then he goes on, he says, Bitcoin was invented in 2009 and will go through waves of development before it achieves the application maturity that we are now used to on the internet. It's a testament of our times that the internet has given many of us instant access to information, but the real value comes when we let our curiosity navigate beyond the algorithm for recommended content. You can only challenge preconceived ideas when you're willing to go outside of your comfort zone. Bitcoin has inspired us to challenge our intuitive understanding of money. And by the way, please listen and watch the Seetee series, especially on Robert Breedlove's YouTube channel, What is Money? Having followed the cryptocurrency discourse for a while, or crypto assets discourse for a while, we decided to reach out to the engineers who made it to the mission to change the inner workings of money more than 2 decades ago. So I have the feeling, the same with Michael Saylor, who has gone really, really within a short, span of time, really deep down the rabbit hole during the, this whole pandemic with a lockdown, COVID hysterical lockdown. I believe that Kjell Rokke, the chairman founder of Aker, has also sort of disguised or very hidden in a hidden way, somehow really made contacts, talked to all the engineers, to the technologists, to the most prolific Bitcoiners while doing his research. Anyway, so he goes on. This morning, we also proudly announced that Seetee has formed partnership with Blockstream. Really enthusiastic, a global leader in Bitcoin and blockchain technology. Blockstream's leadership includes Adam Back, the inventor of Hashcash, a 1997 precursor of Bitcoin. And by the way, Adam Back was quoted and cited in the white paper of the pseudonymous Satoshi Nakamoto, whoever he, she, it, they was. With Blockstream as our partner, we are confident we can navigate this industry. Not investing is the riskiest decision. Risk is not an obvious concept. What's commonly considered risky is frequently not, and vice versa. We are used to thinking that cash is risk-free, but it's not. It's implicitly taxed by inflation at a small rate every year. It adds up. Central bankers have magically agreed that they should target 2% inflation, which implies that 1/3 of your money's worth is taxed away every 20 years. Of course, the 22% or whatever they're being told as a fairy tale is according to the official numbers and consumer price index and all this bullshit and the distraction and the fraudulent data. If it was 3%, almost half of it would be gone in that time. Now, you should ask, why is it 2 and not 1 or 3? What's special about 2%? The Federal Reserve has recently said it will target an average rate of 2% over time, which implies they will allow inflation to run above the target for some years. Inflation is very good for debtors, and the US is the world's largest debtor. They owe the bond owners and they owe pensions. Both groups may be out of luck in the long term. One way to demonstrate this effect is to price real estate in gold. The Schiller Case Home Price Index is the leading measure of US residential real estate prices. Measured in gold, home prices in the US are among the lowest they have been in the last 100 years. In 2004, Norges Bank sold its last gold reserves, citing poor historical returns. And so on. So it goes on. So what's risk? It's all relative. In 2018, Twitter hashtag #GetOffZero started to circulate. The main argument, it may be irresponsible not to include some exposure to Bitcoin, given the asymmetric return properties. Even if you don't get the underlying cypherpunk and libertarian ideals, which I find most interesting, you still need to consider the potential diversification and benefits of Bitcoin. Schmuck insurance, in the words of social capitalist Chamath Palihapitiya. So let me just record because I forgot to record. I'm live streaming. I forgot to record anyway. I've told this story before, blah, blah. So let me go to the parts where I highlighted it. And it will probably happen again. And what happens if the central banks cannot stop the fall? What happens to the monetary system if people start questioning the stability of the reserve currency? Again, this has happened many times in history. I respond to today's challenges as I would when I was a young man. I will always prefer to be a focused entrepreneur rather than a diversified investor, albeit with a tad bit more risk management and infinitely more academic rigor. around me than I had early in my career. One of my favorite questions to people who ask me about the risks that's inherent to our ideas, what about the risk of losing out on the upside? Young professionals know they're risking their careers if they say yes to what eventually becomes bad investments. That's the name of the game. What you should really get fired for is saying no and losing out to once in a lifetime opportunities. Bitcoin may still go to zero. Zero to what? I mean, that's the question. Zero fiat denominated, sure. But you cannot ban, you cannot stop Bitcoin, and Bitcoin has its own value because of its absolute scarcity. But that's my comment. So we should stop thinking in fiat denominated fears. But it can also become the core of a new monetary architecture. If so, one Bitcoin may be worth millions of dollars. The asymmetry is interesting to portfolio. People who know the most about Bitcoin believe its future success is nearly inevitable, whereas the other camp thinks that its failure is equally certain. Status quo is not possible. In the past months, I have met many new people. One of them was Jack Muller at Strike. He's almost 40 years younger than me. Experiencing his energy and enthusiasm was special. I felt all old in his company, but also very emboldened. I lost out on mobile communications. I didn't invest in internet companies. It was only recently that I started to invest in and build software companies, and I love it. When I realized how much brain power goes into Bitcoin, I saw the future in the making, turning challenges to opportunities. Maybe that's important too to read. It has been more than a decade since the pseudonymous Satoshi Nakamoto published their paper launching a new form of electronic money, Bitcoin. I was skeptical of Bitcoin for many years, who wasn't? And my arguments were more or less consistent with everyone else's. The network's electricity consumption is wasteful. The network is not scalable. Its ideals of anonymity play into the hands of criminals and so on. Money is a human invention, a social construct that only works since we collectively believe in it. In fact, the term fiat money is derived from the Latin word fiat, which means an act of will that creates something without further effort. It's a decree. Of all the previous attempts at digital currencies, and there were many, Bitcoin was the one that broke out. In the beginning, it was worth 0.0 with as many zeros as you would like. But the more people believe in it, the more valuable it becomes. It's a classic network effect. Yes, Bitcoin consumes electricity and pays for it at the locally prevailing market prices. But we believe Bitcoin will enable applications that can create tremendous value. If so, it will be ingrained into the social fabric and cannot go to zero since it's immune to the political forces that destroys a currency. If this scenario plays out, we might change our focus from the price of Bitcoin to that of Satoshi. One Bitcoin is a 100 million Satoshi. If our phones are full of Bitcoin applications in 5 years, the network's value is a stairway to heaven. So is it wasteful? And it goes on, about energy and also talk about Adam Back and all that. And he smashes all the FUD, so come on, it says it consumes as much electricity as. Bitcoin's electricity consumption must be analyzed with respect to the future scenarios for the network. A lot of volatility is natural when market participants are trying to forecast with a Bitcoin is a speculative bubble that would implode and be worthless. A digital scarce asset that could replace gold as a store of value, or third, a monetary architecture that will serve as the core trust and verification layer for numerous types of transactions. If you subscribe to the bubble narrative, you can rest safely knowing that the electricity consumption of Bitcoin will return to zero in the near future. Miners will not expend energy if the Bitcoin rewards are rendered worthless. If that's your view, the discussion is moot. What if Bitcoin replaces gold as an asset class for portfolio diversification and store of value? Now, to all the gold bugs out there, this is not our prediction. Thousands of years of history as sound money means gold will likely remain attractive. Well, I don't agree with that, but anyway, I think it will be reduced eventually to, industrial usage, and we will find more and more gold. If we put more energy, resource, and special technological innovation into finding Bitcoin, let's be on planet Earth or anywhere, asteroids or anywhere, Mars, or whatever, new subnuclear technologies. We merely use this example to show that Bitcoin scarcity would be sufficient. Environmental price would be much lower. Also, to be clear, this scenario is not why we're excited about Bitcoin, but it may be the easiest use case to understand. Current gold production is around 3,000 tons a year against an inventory of about 200,000 tons, which is all the gold that has been produced throughout history. Of that, less than half is used for jewelry. The so-called stock-to-flow ratio, which is a measure of scarcity, where a higher number is better, is therefore currently around 56. At the current rate of production, it would take 56 years. It would take 56 years to double the inventory. What's the comparable scarcity of Bitcoin? The current block reward is 6.25 Bitcoin, which translates to about 900 new Bitcoins every day, or 328,500 per year. Given 18.6 million Bitcoin in existence, the stock to flow is currently approximately 56, which is on par with gold. But after the next halving, which will happen during the spring of 2024, the stock will be higher and the flow will be lower. So stock to flow will be more than double that of gold. Bitcoin will be much scarcer than our scarcest commodity. And it goes on, about Bitcoin CO2, all this stuff. And let me. We obviously cannot know how this play out. Many technologies will complete to solve these challenges, but we do know that many applications are too important to leave the verification to centralized systems owned by a corporation or controlled by a single country. Clearly, the protocol is designed to cut the rewards in half every 4 years or so. Miners will only expend electricity if it remains profitable. 18.6 million of the maximum 21 million Bitcoins exist today. So at the end of this year, 90% of Bitcoin is already in existence and paid for. 9/10 of the infrastructure is there. Since the block reward goes down significantly over time, the miners would be willing to expend less electricity, all things equal. Either the variable transaction fees or the price of Bitcoin have to increase substantially to compensate the miners. Since the block reward will approach zero, fees are the only viable long-term compensation mechanism. Since the transaction volume cannot increase given Bitcoin's design, fee increases imply that the value of single transactions must be substantially higher than today. Presumably, that's only possible if every transaction on the main chain always involves very large amounts. Billions of smaller transactions would have to execute with acceptable security in second layers and sidechains. Again, all of this is only commercially and economically viable if the value of verifying large transactions without a trusted third party is sufficiently high. This implies high demand for the network's architecture, which again means that useful applications that create tremendous value have been built on top of the core network. Bitcoin can therefore only survive, and electricity will only be consumed if the value created by the network is sufficient. Even completely disregarding Bitcoin acting as an economic battery that may improve the economics of renewable projects, which could accelerate the installation of intermittent sources of electricity, we don't see a long-term problem related to Bitcoin's electricity consumption. If it's a bubble, if it was a bubble at all, it dies and consumes nothing. If it's digital gold, it's more efficient and will emit much less than the asset it disrupts. I mean, not to mention all the human disaster, the slavery, the environmental damages, and on, the toxicity and stuff like that. And if it's really successful, it's because of demand from truly value-creating applications that define our future and should be worth the electricity. Fine, but how will it scale? It is true that the Bitcoin mechanism. It is true that the Bitcoin main chain cannot process the number of transactions that we depend on in modern society on its main chain. But that's because Satoshi Nakamoto's design didn't trade censorship resistance and security for scalability. So scalability has to be solved by making slight trade-offs. Bitcoin doesn't compromise. To ensure it's open and secure, resistant to censorship and retroactive edits, it's decentralized, but that's a major drawback for scalability. Keeping one central spreadsheet up to date is obviously more efficient than having numerous copies that all must be updated. A Bitcoin transaction takes about 10 minutes to be confirmed, and the design capacity is about 7 transactions per second. Hardly sufficient to deal with today's transaction volumes. But when I heard Jack Mallers talk about the Lightning layer, I had another Rossellini moment. He's talking about Strike. The Lightning Network is built on top of Bitcoin to make it scale. Transactions are done in bilateral channels that connect in a network, and each channel is anchored to Bitcoin's main chain with a single transaction. Lightning transactions complete in milliseconds and can process millions per second with hardly any use of electricity. It therefore leverages Bitcoin security while increasing speed and reducing cost to levels not achievable by legacy payment rails. Does a global distributed network of bilateral payment channels sound impossible? In fact, that's how spot foreign exchange works. Aker is the largest investor in Eboli, a non-bank liquidity provider in the foreign exchange market. We have spent a lot of time learning about the microstructure of financial markets. It's only a matter of time before the old and the new world of money is seamlessly connected. On that night, with all of us on video from Chicago, Tel Aviv, and Oslo, Mullers sent dollars from a regular bank account in the US via a wallet in Tel Aviv and further on to Oslo. Then for fun, we sent it to an Aker colleague in Accra, Ghana. All of these transactions took place instantaneously and at nearly no cost. This creates a possibility of programmable microtransactions, a payment stream which can unlock limitless opportunities. Applications will have different needs and people will be willing to make slight trade-offs to achieve those. I'm certain that with time and creativity, applications that scale in sidechains and layers on top of Bitcoin will flourish. This ecosystem can provide massive scalability and will only need to settle with the main chain now and again, like getting a stamp of approval from the source of absolute truth. As such, we believe Bitcoin will scale brilliantly in layers upon layers that make the trade-offs applicable to particular application. And as we will see in the next paragraphs, it may provide the opportunity to build an entirely new architecture for how information flows in society. Still, doesn't Bitcoin enable undesired activities? Okay, so he goes, he smashes all the, disassembles all the FUD. On the other hand, it says somewhere down the line, he says, on the other hand, as has been so eloquently exposed by Shoshana Zuboff in her book, The Age of Surveillance Capitalism, the internet behemoths have turned us into the product. I'm certain we need to fight back against unlawful access to information that requires a new architecture. On a personal note, I'm frequently frustrated that I give away usernames, passwords, locations, credit card details, and other information to read newspapers or watch movies. I'm fascinated by the prospect of Bitcoin Lightning wallets that may enable instant credit via micropayments without the need to offer personal information that my counterpart can monetize without approval or compensation. So, if you insist on being anonymous, doesn't that mean you're hiding from the law? Of course not. To the contrary, I believe Bitcoin holds the promise of much more sophisticated KYC, know your customer, and AML, anti-money laundering procedures that enables access when there's legal grounds, but keeps everything anonymous in all other circumstances. Now, what he doesn't mention, of course, and I understand his position, he's a CEO, founder, chairman, whatever of Aker. And, we need to emphasize the grand criminality that's going on the central banking and commercial banking level globally. Approximately $2 trillion are being money laundered for all kinds of criminal activities, would it be, the military industrial complex, weapons, drugs, human trafficking, and all that. After all, the legacy banking system of themselves are arcane, complex, and vulnerable, which means there's room for innovation. Lastly, let's also remember that the current system doesn't work for everybody. As a businessman in my 60s, I have access. The current system works relatively well from my perspective. But what about the poor but hardworking farmer? What about the billions of unbanked that have no way of accessing a bank account, much less credit to build their lives? From their perspective, what we have today clearly doesn't work. And the regulatory patchwork makes it even harder for them. It's unacceptable. Bitcoin's protocol should enable an ecosystem of applications that may change that, because many more people will have access to mobile phones and the internet than have access to traditional financial infrastructure. And then he goes on to the chapter, progress is inevitable with so I'm going to, scroll a little bit further. And what I love is that he also refers to the what the fuck happened 971.com website. From Ben Prentice and what's his heavily armed clown. Let me just scroll on a little bit. Scarcity. Yeah, we need progress, says, and then says scarcity drives prices. Whether we talk about watches or guitars, wine or cars, painting or sculptures, all physical assets. Making digital assets used to mean it could be copied for free. Not anymore. Bitcoin can be verified, divided, reassembled, stored, and transported at virtually no cost. It's the perfect scarce digital asset by design. All that's required to keep the network running is allocating the cheapest electricity in the world. Electricity secures the network. No trusted parties or people with guns are needed. I call that progress. Like gold, Bitcoin has the ability to protect us against politicians and other, puppets who have the power to destroy a monetary base. Is that really necessary? You might ask. Ask Soviet pensioners whose policies are still honored by the Russian government, although the value of those payments is bupkis because of hyperinflation in the 1990s. Strike up a conversation with a Turkish worker next time you are on vacation and ask how it feels to have your currency depreciate by almost 50% against the dollar in a single year. It has happened. It happens and will happen again, as you can see in all these countries. Turkey, Iran, Venezuela, wherever you can look, or African nations. I mean, we're talking about real hyperinflation, not only inflation. Many argue that governments may ban Bitcoin or that new regulation will destroy it. While it would require new global coordination, which seems implausible, we cannot disregard that the introduction of more friction for adoption, for example, a ban on exchanges to limit people's ability to buy or sell, would make the asset less attractive. But we remain unconvinced and believe that proper regulation may actually increase interest in cryptocurrencies, as it calls it, as institutions can participate. There's only Bitcoin, no shitcoins, but that's my comment. Let us also remember that new financial applications that may be enabled by Bitcoin can improve lives. According to the World Bank, more than half of the global population has access to the internet today, and coverage is increasing rapidly. Just think of Starlink, of Elon Musk, SpaceX, and all that. The satellite, infrastructure, the building with super gigabytes per whatever second. Still, billions of people cannot get access to a bank account. And even if they can, it's costly, cumbersome, and slow. The current system mostly works, at least for privileged people in our part of the world, but banks remain inaccessible institutions for many. Let us all hope that can change. The direction is clear. Finance will be disrupted as surely as fossil fuels will be. The question is not if, but when. But I will offer two quotes as a reminder. And then he quotes, Henrik Ibsen, progress is impossible without change. And those who cannot change their minds cannot change anything. And for those who are already convinced, recall late singer-songwriter Tom Petty's lyrics and remember that the waiting is the hardest part. Joining the community, and then he says, I realize that in some ways, Aker is very late to this space. Obviously, some people understood the potential of this invention many years ago, but in so many other ways, it is, as is demonstrated in everyday conversations with other people in business, we are also relatively early. My mind spins as I'm thinking about the opportunities and potential of this space. No doubt there will be disappointments. No doubt there will be hardships. And there will always be surprising twists and turns. We believe the Bitcoin network has a real first move advantage. Social adaptation will determine the future of it on a wider scale. People who are a lot smarter than us believe that Bitcoin can increase in value by 10 or even 50 times in the coming years. I mean, that's an understatement, in my opinion. Given the huge lead, we are not convinced that other, as he calls it, cryptocurrencies can challenge Bitcoin, given the strong network effects. However, there is no such thing as certainty, so we will remain painfully alert and passionately curious. In any case, we have to expect a lot of volatility, but we don't care because we believe in long-term functionality. We would never recommend relatives and friends to invest everything they have in Bitcoin. It is a good rule of thumb to remember that there's uncertainty in everything. It's like a trial. But I mean, my humble opinion, if Bitcoin does not succeed and we don't, experience hyper-Bitcoinization, the rooting of Bitcoin in every layer and dimension in our planetary civilization, we are fucked anyway. But that's my opinion after my research. If you look at everything, the centralized structures, what's going on, nation state governments, military industrial corporate complex, the fraud, the corruption, the wars, the slaughtering, and everything that's going on. The surveillance and all that. So you can be 100% sure that you're correct, but even then it is hardly more than 80% certain that you're right. The lawyers call it litigation risk. Aker is the first major company in Scandinavia to allocate capital to Bitcoin. We're not going to be the last. We don't claim to know everything about the subject. And as we have learned something, we realize that the concept of money is in essence somehow unknowable and constantly changing. Niels Bohr, the Danish Nobel Prize winner who made significant contributions to our understanding of atomic structure, once said about quantum mechanics, if you think you understand it, that only shows you don't know the first thing about it. Perhaps money is the same, but we're eager to learn more. Again, follow Robert Breedlove on YouTube, Twitter, and listen and watch his YouTube series, Seetee series, What is Money? Really highly fascinating. And all these other interviews with Jeff Booth, it's been in the making. And we're truly excited about the prospect of being part of a community that is so full of talent, intelligence, creativity, ambition, youth. We can provide access to real-life industrial problems that may be difficult to access elsewhere. We're also curious and eager to learn. And more importantly, when we believe in something or someone, we're prepared to look like idiots for extended periods of time. In the words of the late Norwegian politician Einar Førde, a brilliant rhetoric who represented the Labour Party, you have to put yourself in the position to be labeled an idiot now and then, or else life would become too boring. What a sense of humor. Love it. But we're not alone in seeing a new monetary architecture on the horizon. Last year, Bitcoin made significant progress towards becoming a mainstream investment. When investors with indisputable track records like Paul Tudor Jones and Stanley Druckenmiller disclosed that they have significant positions, everybody with a curious brain should pay attention. Companies like Tesla, MassMutual, MicroStrategy, and Square have flagged positions, while Fidelity, BlackRock, Morgan Stanley, and other asset management behemoths are working to launch investment products for cryptocurrencies or crypto assets, which would make it easier for investors. Again, there's only Bitcoin and no shitcoins, okay? And you can put everything on the second, third, fourth layer on the Bitcoin's protocol and infrastructure around Bitcoin and within Bitcoin, my opinion. We believe Bitcoin is going to be on the right side of history, but we should remind ourselves that some will resist forcefully. Norway was the last country in Europe to adopt color TV in 1972, several years after technology was available. The brilliant Einar Førde famously addressed the Norwegian Constituent Assembly and said, protesting color TV is equivalent to saying we accept that sin has come to earth, but we don't want it in color. The future is defined by the young. Therefore, I encourage entrepreneurs with knowledge about, experience with, and big ideas and ambitions for Bitcoin to reach out to me and the others at Seetee. The bigger the dream, the more we listen, especially when those ideas have an industrial angle or can be a force for good. We are not just going to wait for the future, we want to join in building it as well. Best regards, Kjell Inge Roque. P.S. I've written this letter and founded Seetee in close collaboration with Ole Snove, who I've known and worked with for nearly 50 years. For nearly 15 years, he has contributed 10% of the capital and will be Seetee's executive chairman. Now, what I miss a little bit in this whole shareholder letters or anywhere on Seetee's or Aker's sites or whatever is the bigger, grander vision connected with ethos, connected with with the not only disruptive but really evolutionary processes. Would it be what is really achievable? Not only in terms of disruption and growth and industrial, all these keywords, but like what is the bigger picture? What is the true potential? Once we root the localized economies in Bitcoin, when we decentralize all the centralized infrastructures, what is possible with 0 to 1 technological innovations once everything is rooted in Bitcoin. So a little bit like what would interest me, even if it's from a personal angle, what is the bigger vision? What is the bigger perspective? If you have conviction and trust and knowledge and comprehension of Bitcoin, it should be no problem to not make a prediction, but to make an assessment, to make to draw a step-by-step process how this world will eventually evolve into and create abundance of prosperity for not only ourselves but especially for our children and our grandchildren and children of our children. Anyway, so I hope you enjoyed this reading of the shareholders letter by the chairman and founder of Aker, namely Roque, Kjell Roque. And let me know if you have any questions, comments, remarks. That was a pretty lengthy shareholders letter. I didn't want to read too many parts of it, so I'll put that in the show notes. So let me know what you think. I will stop live streaming now and go to the first part, which I didn't record for the podcast version. So thank you so much again for your support, for your help, for your following me on Twitter. Please subscribe to my YouTube channel, my podcast platforms. Follow me on Twitter. And if you have any suggestions for a one-on-one discussion, I already contacted Seetee and Aker. I'm hoping to get a talk directly with the chairman founder of Aker, or panel discussion with other decision makers in the new subsidiary of Seetee, which is only Bitcoin holding investment in Bitcoin. So thanks so much again, and let me know what you think. This is the Keyvan Davani Connection. I'll see you soon again.